Greetings. Welcome to my weekend market recap, 10th December 2023. I'm Sagar Nandi, retired IT professional, swing trading stocks using, using the Q systems that I developed in the USA as well as India markets. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. In my trading, I combine technical analysis with market strength or weakness, sector industry strength or weakness, and fundamental strength or weakness to find trades. Strength side for bullish trades, weakness side for bearish trades, and sometimes I may look at seasonality also. I'm able to do all these analysis in 100% real time in the USA market as well as global markets using the Q systems. That's the only system I use, and I regularly share trading ideas and market analysis using the Q analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. Can be does not mean it has to be. Can be risky. You may refer to the characteristics and risk of standardized options document from OCC to decide if options trading is suitable for you. Q has multiple components. All the components run on the Metastock platform, and the technical analysis component runs on TradeStation as well. I'll use these systems live today as usual. Now, the secret of what I would say a higher success rate in my swing trading than many other swing traders lies in the fact of combining the strengths or weakness from multiple dimensions to find trades and perfectly time them. Let us have a look at one stock that I shared earlier. This is ASB, a banking stock in the USA market, and using Q technical analysis, you could identify it on this day as a breakout candidate. The chart template that I am using that shows the historical trend lines, the ones that are broken now, they are these dashed lines. And if you look back for some time, this was the first day where you could buy with confidence because all the nearby trend line resistances were broken by that time. Prior to that, for a reasonable period, we would not buy since the time this downtrend started. This was actually the first day when there was no nearby trend line resistance. That was the time, if I remember correctly, I identified it as a breakout long setup. It tried to calm down but then rallied. Notice this pattern, a breakout with a very long bullish shape candle, then a pullback, but the candle bodies are relatively much shorter, and from here the volume also dried up. Now these are useful insights, but these are not parts of Q trade setups. These are useful insights. The trade setups are unambiguous. We don't have to look for volume drying up. We could identify it as a breakout setup right on this day using Q Finder running on TradeStation or Metastock. Also notice after the small body pullback, it jumped up again with a very bullish shape body. Those patterns are bullish. Again, these patterns are not required to be seen for Q trade setups, but this is a bullish formation. When breakout happens with a long bullish candle, pullback happens with shorter length candles, and then again it goes up with a long bullish candle, and then it has continued to go up. I bought the stock. I think I mentioned it also, and when it came near the trend line resistance, in fact on this day, I closed my position. After that it went up again, but that is okay. Why okay? Because relative to the stop loss, the risk taken in the trade, the profit was much more. So I was okay to take the trade. This is one of the tenets of Q swing trading philosophy. Another thing one could do if one wanted was to close partial position and continue to hold partial position. That would be a perfectly valid choice also. But I booked my profit in the trade. Now, these kind of trades work out, as I mentioned, and as you know, if you are following my trades on YouTube channel or Twitter, better than many other swing traders, not only because it was an unambiguous breakout trade, because as I mentioned, I combine the forces from multiple directions. Let's look at the fundamentals of this stock ASB using QVital scorecard. One glance, you don't even read all the boxes, just looking at the colors, in a few seconds you know this is a strong stock to buy. Undervalued, funds are accumulating, insiders are buying. If you want to put weightage to analysts, they are bullish. And even now, after the price has gone up significantly since I first identified it, even now it has a dividend yield of 4.5%. So when I identified it, it was even higher. The company makes money. And even on Friday, this Friday, the industry in itself is very strong. When I identified it, that time also it was very strong. That is the secret of higher success rate in Q 360 degrees trades. Not only because they are technical setups, but because they are 360. They are long setups in strong industries with strong fundamental stocks. Now, if you watched my last 2-3 weeks of market recaps, you would know that I was bullish. All my sharings were on the bullish side, and I preferred small cap stocks. My view is not bearish now, but in the last market recap also I mentioned that I am not buying so much, but small cap still had some way to go before being overbought. In the last market recap, we'll find out how it is today, but before that, let's look at some other charts. Dollar index, beautiful, isn't it? Now if you look back, you see that the bullish headwind caught the very swing low of dollar index. So when we came here, we would know that there was reasonable likelihood it will stop going down, and it in fact went up. That would have pressured the stock market somewhat, but it did not change the trend, and that is important. It is still having lower high and lower low. When it went below lower boundary and we had a bullish headwind, we would expect a recovery, but that did not change the trend. On Friday, we have an indecisive shape candle. The weekly color is neutral. Weekly is stopping at multiple direction lines. If it comes down again in daily, then that may help the stock market. That may lead to market going up further. So I am not bearish on the market. I mentioned it upfront. I am not bearish in the market. Is it overbought? We'll find out. We saw in the last market recap, in some respects, it was overbought last market recap. We'll see how it is today. But it is difficult to be bearish from dollar index perspective at least, because it is still in a downtrend. By the way, if you notice, even if it goes all the way up to the trend line resistance, it will still remain in a downtrend. It will have lower high, lower low, unless it can break out of this resistance and then probably this resistance, which may not happen easily. Yes, it has some room to go before it hits the trend line resistance, but it will remain in a downtrend. Let's look at some of the global markets quickly. I'm explaining more and more on Q systems again today, because I am not going to look at many stocks. I'm going to look at some specific kinds of stocks that I would like to buy, if I buy at all, in the current market. I look at them, but let's focus on the technique. The technique systems are most important. Finding trades is the easy part. All ordinaries. Australia market. Now going into the global markets. See how the Q analysis plays out, and why I mentioned my success rate tends to be higher than many other swing traders. This is another live example. In the last market recap, I mentioned that because the trend line support was there and there were many direction lines below price, I remember showing that only the white direction line was above price, but all the other direction lines were below price. And more importantly, I mentioned specifically, more importantly, the trend line support was very close. So we were on this day last Friday. I mentioned that I am favoring a bullish move, and that played out exactly the way I wanted it to play out. Therefore, I would be ready, if I was trading in the Australian market with a list of stocks that was fundamentally strong in strong industries. I would buy it at the perfect time with high confidence. High confidence in what? That those trades would all make profit? No. High confidence in that I have done my job. The rest is up to the market. But over hundreds of trades, if you do your work, follow a systematic approach, the PNL will take care of itself. And I think my trades, my sharings are a good testament to that. As of Friday's close, we have a bullish daily candle and bullish weekly candle closing right at the very top. There is no other way than to view this market as bullish, and it is in an uptrend. So my answer to the two usual questions, what is the market's direction and what is the preferred trading direction, both are bullish in the Australian market. Now let's look back. See some other Q patterns I repeatedly mention. Jump thrust low, price extreme low, all of a sudden came a big move up 3. More often than not, as you know, I hesitate to say always, most often than not, I would say, it leads to the instrument going up. Played out perfectly again. So when this kind of pattern appears, we are looking for bullish setups. This is of course the market index. You would easily look for individual fundamentally stocks, strong stocks going up in strong industry at this point, and as the market went up, those stronger stocks in every way would have gone up further, giving us a series of profitable trades. Now I notice there is a pullback, and in ASB, I think I should go back to ASB for a few minutes. Let's go back to ASB. There was a pullback in ASB also. Now the question is, how do I or how do you manage the trade after you or I buy the position? One way is to use options. As I mentioned, options can be very effective in managing the trades. If you are trading using verticals, in this case a bullish trade, so long call vertical or short put vertical, that is by definition a defined risk trade, and you would not need to put a stop again. That is a very effective way of trading swing trades, provided the stock is liquid. I didn't trade this one with options, I did trade with stock. In that case, there are few choices. If I am buying it based on the dividend, remember it had a high dividend yield when I bought it, even now it has a high dividend yield. So if I am buying it as a dividend play, then I wouldn't worry so much about the stop, because I may be able to or willing to hold on to the stock long term anyway, while keeping an eye on the stock's fundamental scorecard, on the industry and the chart, of course. But there was no hurry to close out the trade based on stop loss if I considered it a dividend play. Remember, funds were accumulating, insiders were buying, strong industry, undervalued stock, high dividend yield. There was no reason to exit it closely if you were or I was ready to hold it long term. The third way is to apply initial stop loss, and let's see how we would do that. I changed the template to the protection chart template which shows the stop loss. We had taken the bullish trade, it was identified as a long bullish trade on this day. The stop would be using Q methodology below swing low, below swing low, but in case of a gap long day, below the gap candle following the protection level. So we would apply stop here, and you notice beautifully this stop did not touch, so we would remain in the trade. Some people exit the trade only if the stop is breached by the close, so that a long lower tail does not stop out a trade. In this case, in any case, the long lower tail did not, if I clear the lines, it did not touch the stop anyway. But if you think that there are several approaches, but let me share my view. If the market is strongly bullish, then you may take one approach. If you think market is overbought, you may take another approach, and you may keep an eye on the industry also to decide whether you allow the stop to be hit intraday, or you want to check if the stop is breached at the close. And the third approach, which actually is less time consuming, because we don't have to necessarily check the market at the close, and the third approach that is more effective in terms of time management is to see if the stop is breached after close and then exit the trade if low of the day is breached the next day using a GTC order, stop loss order, actual stop entry order. In any case, whatever be the mechanics you use for stop, if you bought it using a stock and you wanted to place the stop loss, the stop was not hit. You may go through the master classes to see how these different signals can be used in different ways. In this case, if you ask what did I do, I did not put a stop loss because I was comfortable holding the stock if required based on the dividend yield. So I was not worried about the stop in this case. If you applied a stop, that would not be hit as well. Now let's go back to the global markets. Australian market clearly bullish. Let's look at the other markets relatively quickly. Topics. Once again, Q systems and my analysis, I have no special ability. I'm just reading the Q signals, worked out beautifully, aka profitably. In the last market recap, I clearly mentioned that in this case my preferred trading direction would be bearish if it came down from the trend line resistance, and it indeed came down. On Thursday we had a bearish flow candle. So on Thursday you could initiate short trades in the Japanese market in individual stocks. The week ended with a bearish daily candle and also a bearish weekly candle. If you interestingly notice now, once again, the bearish headwind in the daily and weekly caught the very top. And if you look at the weekly, after this sizable drop, after the bearish headwind, a recovery created a lower high, and then we have a bearish backdrop again, flipping from bullish backdrop 1 week ago to bearish backdrop, that is more bearish because it did not go through the neutral yellow color. So using the pattern in weekly and the trend line resistance in daily and the bearish flow in daily, we could perfectly time short trades in the Japanese market. What is the market direction? If I ask those questions again, it is moving sideways. In a sideways moving market at the upper edge, my preferred trading direction can be bearish if it comes down. That is remaining bearish looking at the weekly daily, but not as bearish as it would be on Thursday. Remember, the more it moves to the center of the range, I am reluctant to take any trades. I am more happy to take the trade at the edge as it reverses. So Thursday was the entry day for me, and I always mention we are, many of us, I am active trader, and Q systems is very unambiguous, easy to use, doesn't take much time. If I didn't take the trade on Thursday, I would wait. I would not enter a short trade late by 1 day. Why would I do that? I would wait for the next setup in the next stock. So Thursday was the signal day for taking short trades in topics. Yes, I am still bearish at the close of Friday, but I would not initiate a short trade in an instrument whose chart looks like topics. I would have traded the short on Thursday, not on Friday, not late by 1 day. Well, China's CSI 300 next. Look back again to the last market recap. I mentioned that it was getting oversold. Prior to that, in this area itself, I mentioned that I was bearish. That bearish trade worked out very well. Last market recap, I mentioned it was getting oversold. I was not going to short, and I was getting ready. That thing, the thing that I was getting ready for has not happened yet. We have jump thrust low, we have price extreme low, we don't have big move up 3, we don't have a bullish headwind. So there is no reason for me to be bullish, but I will not short an instrument that is so oversold from so many different angles. I would have shorted when I mentioned that I was bearish, and I would short at this point at swing high using the flow short setup. That was easy decision, and that was a profitable trade. FTSE index, again looking back, in the last market recap I mentioned I wouldn't trade FTSE. It was inside a range, right in the middle of the range, in daily as well as weekly. I am continuing with the same view. Yes, this trend line is broken, but another trend line resistance is nearby. The breakout happened with an indecisive shape candle on Friday. There is no reason to be bullish, and there is no signal to be bearish as well. India's Nifty 50 made a new all-time high. For weeks I used to mention this was the strongest of the global markets, and now again strongest of the global markets made a new all-time high this week. Last week we were here, and I mentioned because of the bearish headwind in weekly, because of the watermark resistance in weekly, I was not going to buy anymore. But I bought earlier and I'm holding some of those stocks. I would not buy now personally because it is approaching jump thrust high, already at price extreme high, and it is overbought as per stretch indicator for many days, far above upper boundary line. I never buy such overbought stocks. I never sold so oversold, never short so oversold stocks like China market. I never buy so overbought stocks like India market. Did I get it right? I never short so oversold stocks like CSI 300. I never buy so overbought stocks whose charts look like Nifty 50. Could individual stocks be bought? That is a separate thing. We could look at the industry strength. Maybe some turnaround candidates are there in industry and some strong fundamental turnaround candidates in that industry. Those could be bought. But at market level, this is too overbought for me to buy. What about USA market? Last market recap I mentioned there was still some room for small cap to go up. Small caps, did they go up? Let's look at them. IWM, I switched from Q Global on Metastock to Q Elite on TradeStation. I was bullish on small cap for several weeks. This is IWM, it went up again. Until this trend line support is broken, I am remaining bullish on small cap. If this breaks, am I going to be bearish? No, because there are too many support direction lines and more importantly, a nearby trend line support is there even if the first one is broken. So I'm not going to turn bearish on small cap anytime soon. If this trend line support is broken, I am in fact going to look for IWM to create a higher low and go up from there. That could happen from the yellow direction line. I will be happier if it happens from the trend line support, which would also mean going up from the yellow direction line in this case. So I'm not going to turn bearish into small cap anytime soon. I will be happier actually if it pulls back little bit. I am not going to buy now. Looking at the bearish headwind that came this week, but that was not a short setup clearly because there was a trend line support. But this bearish headwind and price stalling for several days is making me less bullish on small caps than I was last week or the week before that or the last week before that. And I already bought stocks, they are in a good profit. ASB was just one of them. What is the direction of IWM? The same two questions. It is bullish. What is my preferred trading direction? I will be very cautious to buy. Of course, I will not short. I mentioned that already. I'll be very cautious to buy. And when I am cautious to buy, there is a kind of stocks that I want to focus on. So what we can do, okay, we look at those stocks. When I'm cautious, there is a kind of stocks I can still continue to buy, provided they have proper 360-degree setup. I'll come to that. But let's look at the other market ETFs, DIA. By the way, Q systems is fun for me. Trading is fun for me. My other hobby, trading is also kind of hobby, though it also generates my income. Both are hobbies. Both are colorful for me and both are fun. So this analysis is actually fun for me. DIA is overbought for long time. I'm not going to buy an instrument like this. And for last couple of weeks, I was not looking at industrial stocks. Yes, it went up, but that's fine. Initially, I think there was some resistance nearby. and I favored IWM because from internal health point of view it was less overbought. Even now IWM is less overbought. So yes, DIA went up. I have no issue with that, but I wouldn't have bought DIA then. Now it is even more overbought. I'm not going to buy DIA now also, or industrials. Is it bullish? Yes. Am I going to buy? No. Am I going to short? No. Of course not. QQQ. And I mentioned earlier, I think in the beginning, that I cannot be bearish on the market. Nothing looks bearish. Looks overbought, but not bearish. QQQ. Notice I was bullish on small cap, not on QQQ, relatively speaking, for my own trades. And IWM went above previous week's high, but QQQ did not. QQQ closed below previous week's high, which had an indecision at the top. Is it bullish? Yes, it is still in an uptrend. Unless this trendline resistance is broken, I have no reason to look for shorts. But if this trendline resistance is broken, which may as well result in a false upside breakout in the weekly, then I may look for shorting some QQQ constituents at the very top, because this is also at price extreme high. But that is if this resistance is broken. And if I take a short trade in some stocks, maybe it looks like QQQ, that will be shorting the top in an instrument that is still in an uptrend. Just breakout of this trendline resistance will not make it a downtrending instrument, because for downtrend we need lower high, lower low. If I'm taking a breakout short setup, that is not a trend following setup in this case, and for non-trend following trades, one safe instrument, safe, no, I should not say instrument, safe strategy is to use verticals, because then I don't have to worry about getting stopped out by spurious up moves, whipsaws. So again, if I am taking trades that are not trend following, meaning that are not flow trades, that are not pullback trades, buy trades, that are not breakout buy trades, then I like to take with verticals and not worry about stops. Currently it is bullish. I have no preferred trading direction. And SPY went up, but not as much as IWM, above upper boundary. Went up, but not so rapidly at the watermark resistance in weekly at price extreme high. What is the direction? Bullish. But I am reluctant to buy now. Of course, cannot short. There is no bearish signal. That was the external view. Let's look at the major indexes internal health. I'll look at the total view, but let's look at the major indexes internal health. Not only this week, for several weeks earlier also, I was not looking to buy industrials, because Dow Jones Industrials, here market internal health check using Q Global Market Breadth, showed that it was overbought from the yellow line, percentage of stocks of 50-day MA, and also 3-month new high low. It was already overbought. That was too stretched to the upside for me to focus on DJI or industrials. That was one reason I was not looking to buy industrials. S&P 1500 and S&P 500, quite broad, isn't it? Not like Dow Jones Industrial. They are quite broad index, 500 and 1500 stocks respectively. They are also overbought from both the perspectives, percentage of stocks of 50-day moving average and 3-month new high low. I would not like to chase those stocks. And that strategy, that policy rather, helped me in the past. I am quite hopeful that strategy will help me now also. Not buy overbought stocks, not buy overbought markets. Nasdaq 100 was lagging, though in 3-month new high low it was overbought in terms of percentage of stocks of 50 MA. It was not, and still it is not overbought. What can turn this market more bullish now is if the technology stocks that are lagging at least from this perspective. I'll delve little bit more today into market health. I'll show that from the Nasdaq exchange perspective also it is lagging. I showed that last market recap also. If the technology stocks now join the rally of the small caps, that will be sweet for bullish trades. We'll see if that happens. But Nasdaq 100 is not so overbought like S&P 1500, S&P 500, and the least overbought is Russell 2000, which was true for previous several weeks. That is why if I want to buy now, I would still prefer buying small caps. And I am watching the technology stocks to see if they join the rally. Why? We looked at Nasdaq 100, that is quite narrow index. Let's look at Nasdaq Composite and NYSE Composite. Very broad indexes. Market health check is even more valuable when we look at broader and broader aspects of the market. Of course, the broadest of all is total view. I'll come to that. Nasdaq Composite or Nasdaq as a whole, much less overbought than NYSE, both in terms of percentage of stocks over 50 MA and also 3-month new high low. 3-month new high low is not overbought yet, but NYSE is already overbought, and I showed that in the last market recap also, from yellow line, from 3-month new high low, as well as from Bengo, thanks to Mr. Ian Woodward, may him rest in peace. From all the three perspectives, I showed that in the last market recap itself, that NYSE was and is remaining more overbought than Nasdaq, and that is why I'm watching if the technology stocks join the rally. That will be very bullish for the market. And what kind of stocks will I prefer if that happens? Technology stocks tend to be high growth stocks. So now let's look at market breadth total view, the broadest of all analysis. The yellow line, percentage of stocks of 50 MA, is not overbought yet, and 3-month new high low is overbought. That's fine, almost overbought or overbought you may say. But we still have some way to go before total view becomes overbought from all the angles. This is same as we saw in the last market recap. Now this pink color line, growth versus value. Earlier it was going up, so growth was outperforming. At this point, I drew this line in the market recap. Okay, let me clear the lines. In an earlier recap or several of them, I drew these lines and mentioned that if the growth versus value breaks out to the upside, and if the small cap versus large cap also breaks out to the upside at the same time, then we would be in the sweet spot of favoring growth small cap stocks. Those stocks can move very fast, but that did not happen. As I showed in the last market recap, overall growth stocks underperformed, though value did better. This week we see value continuing to do better. Growth is sorry. What am I saying? Let me take it back. Start again. If the breakout happened to the upside, we would favor small cap growth, but that did not happen. Growth underperformed, so value did better, and small cap did better. Small cap is continuing to do better, so my preference of small cap stocks from this point itself actually worked out pretty well from this total view perspective also, we see that small cap has outpaced others. So my timing for buying small caps was perfect. And now I see while small cap is continuing to outperform, growth is starting to outperform too. And now combine that with the fact that QQQ, or rather Nasdaq 100 and Nasdaq Composite, were underperforming, and now you can see why I am looking to see if the technology stocks are also going to join the rally. That will lead to me having many Q long setups in small cap growth. I'll be happy to buy them. The last couple of stocks I was buying was probably mostly value stocks, not growth stocks like ASB. Some growth stocks may be bought if the again if the small cap growth starts to go up. We will know from this chart. From the candle itself, we don't have much to read. There is no bingo or no bongo, no Hindenburg. How did the mega cap do? Let's look at that also. Using the mega cap custom index, remember that dollar was going up for few days, and that is exactly the time the mega caps came down. This is mega cap custom index, take mega cap only. The decline in mega cap coincided very well with the dollar index recovering. Now if dollar index can come down, which I think is likely, or I shouldn't say likely in this case, which is possible, then the mega caps may go up again. And I'm not being bearish on mega caps because of this trend line support. If that is broken, and if the trend line support in QQQ breaks at the same time, that will be the time to look for some short trades at price extreme high. Short trades in technology stocks that are also at price extreme high. Remember, QQQ also has a trend line support. If we go back, this is exactly what I mentioned, that if this trend line support in QQQ breaks to the downside, I may look for short trades in stocks that are also at price extreme high. And now when I look at mega caps, I have the same view strengthened further. Mega caps have an outsized influence on technology stocks. If this is broken, probably I'll have shorting possibilities in many stocks if that happens. So I am ready to take those trades if that happens, because I have already done the analysis this week. My market view so far is less bullish than previous week. And previous week, what did I prefer buying? Small cap. This week also same, but less bullish than previous week. But not bearish. There is no way to be bearish in the market currently. And if I look at the market from other angles, I do that every day for my own trading. Look at sector, industry, stock, advanced decline from 1 month to 1 day. Everything is bullish. There is no way to be bearish on this. Q edge breadth insight. Is it overbought? Bucket analysis says that no, it is not overbought. The percentage of stocks above upper Bollinger Band for Q edge stocks, that is S&P 1500, is not at 30 to 40% level, which is the overbought level, is at only 10% level. Is it bullish? Yes, it is bullish from bucket analysis also. 80% of stocks are above mid Bollinger Band. That is very bullish but not overbought. If we have a sudden rally in a lot of stocks, it will get overbought, but it has not happened yet. So it is bullish, it is not overbought, it's not bearish at all. Lastly, technical breadth, very important for making profit. with directional trades. Here we have some weakness in the market. The Q finder technical breadth weekly interval is clearly bearish. We just look at it one time. The color code shows us it is bearish, and if you check last market recap, you would see the weekly picture 1 week ago. That was very bullish. This is not at all bullish, it is overall bearish. However, Friday, the daily picture is bullish from all angles. So if the weekly is a pullback and then we have an uptrend resuming again in the daily, then we may again start to buy. However, from the all other angles, it is so overbought, I am very reluctant to buy. I am extra cautious, and when I am extra cautious, what kind of stocks I may still buy. Let's see if I can find some trade setups. I'm doing it live. I did not look at those stocks. Let's try to find some stocks giving 360-degree setups, that is proper buy setup in strong industries, in strong fundamental stocks that are also high dividend paying stocks. If you are like me, then you may be okay to buy those stocks, and even if they come down, just hold it for the dividend. And if they have liquid options, I prefer not to buy those stocks outright. Sometimes if they have liquid options, I short the put little bit out of the money. So if I get assigned, I get to buy the high dividend paying stocks with strong fundamentals, of course, at a lower price. More often than not, I'll be able to close the trades at 50% of max profit. Again, a way of using options, but not with risk, because here I am not shorting the put with the thought of short-term trading the stock. I'm shorting the put with the thought of buying the stock at a lower price if required. If the options are not liquid, I would like to buy those stocks outright. Now, we have 196 stocks out of about 2000 liquid stocks on which I ran QFinder that have one or more QTrade setup. But I am not going to look at 196 stocks. As I mentioned, in this market, I will be very cautious. So I want to carry out a fundamental analysis of these stocks and find only dividend paying stocks. What percentage? Let's say you may decide your own. Let's say we try to find stocks paying at least 5% dividend yield in one of those or more of those 196 stocks. Let, let's see if QVital can calculate the scorecard. Sometimes when I'm running the webinar, so many programs are running, and I'm living in a village here in Thailand, a true village. Nearest coffee shop is 30 kilometers away. It's a true village. Internet is not as fast as many of you have, but fast enough for me to do trading. Well, I got these 196 stocks. Of course, 100% of them went up because they had a bullish trade setup one way or another. I came to the scorecard. First thing I want to do is sort by dividend yield. I'll come down, let's say, to all the stocks that have at least 5% dividend yield, and I'm not going to open them because I want them to be in strong industry also, relatively speaking. So with one click I came to the industry scorecard Q Edge. I am going to focus on the top 20% of the industries, either in terms of strength or in terms of acceleration. Not thinking much, just clicking the mouse and go back to the stocks again. Now I am left with only 32 stocks. What are these stocks? Let's take a step back, assess what did I do. I looked at about 2000 liquid stocks Then about 200 of them had one or more trade setups as per Q Techniques. I did not open those 200 or so stocks, less than 200. I looked at their fundamentals, only focused on stocks with 5% or more dividend yield, looked at the strong industries, came back to the stocks in those industries, and now I'm going to again select the ones with at least 5% dividend yield. Let's see what are those stocks and trade setups. Navigating back to QFinder. Well-known stocks, isn't it? I see Pioneer Natural Resources, some energy stocks, PBR, some consumer discretionary like coals, some materials, different sectors, industries. What catches my attention first is this stock. See, the color coding is quite useful for me and hopefully for you. This is the only stock among these stocks that is at price extreme low. Let's look at that stock. I look at the others also. Let's try to find at least one buy candidate, at least for me. Actually, I like this stock. Let's look at it using the two chart template at a glance. I like it even more doing it live. This stock is STR. It has a long-term weekly support, price top right at the trend line support. It has a daily trend line also. In fact, daily, weekly and daily both have multiple trend lines support. Daily also stopped right at the trend line support with a bullish indecision and then went up on Friday with bullish headwind. The trend line resistance, immediate one, is far enough away relative to the risk that one would take in the trade, even if it was a swing trade. So STR could be a buy candidate. We not only have a bullish headwind on Friday, we also have a bull release and it is at price extreme low. Now I would like to go back and know a little bit more about the stock. Let's create a one-page scorecard for the stock using QVital again, STR. That was the symbol. By the way, while waiting for Vital to calculate the scorecard, let's also look at the stock using the additional momentum signals. No harm looking at it. And the additional momentum signals has no green color. That is fine. Why I came to it is to illustrate the additional momentum signals are just additional momentum signals and they are more helpful probably when the stock is in an uptrend. But as you can see in this live example, Q has several setups that allow us to buy a stock in a downtrend. That is allows me and allows many other Q traders. We don't only buy stocks at a in an uptrend. This is a perfect example. It has a bounce setup in a way in daily weekly bounce from trendline support, and I am also relying on the dividend yield. Let's look at the single page scorecard of the stock. High dividend yield, that is what I looked for, 9.3%. Strong industry is one I looked for. 85% of stocks went up this week. Oil and gas exploration and production. Let's look at the industry scorecard again. We know it will be among the top 20% in terms of strength or acceleration, but we are now confirming our trade. And in this case, it is not only one of them, but it is among the top 20% in terms of strength as well as top 20% in terms of acceleration. That is a turnaround industry. It was very weak earlier and very quickly went up and became one of the strongest. Because the industry was one of the weakest, you can see the scores also. Color is enough actually, but if you are interested, you can do it. It was second weakest of all, third weakest of all, fifth weakest of all, and now became one of the strongest with most tax. That's a turnaround industry, and in a turnaround industry, I expect stocks to look like what STR is looking like. Saving it for myself. In a turnaround industry, it is okay to have stocks that are in a downtrend because the industry itself was turning around from bearish to bullish. So, okay, this is one stock we found. Now, let's do some other use of the Q systems. When I looked at STR, I saw 85% of PR stocks went up. I'm looking for high dividend yield stocks. What did I start with? I started with Q Finder. What did I run Q Finder on? All liquid stocks. How liquid? 500,000 shares traded per day. Now, if you are trading for reasonable number of years, you would know that we don't always have to go for 500,000 shares traded per day, especially in some of the smaller stocks. And this industry, like all other industries, can have stocks traded less than 500,000 but very nice buy candidates. Why don't I look at them? And that is a great use of Q Vital. I will prefer to buy more liquid stocks, but if a stock is traded 400,000 shares per day on average, not 500, I'm perfectly okay to buy it if it is having strong fundamentals, strong industry strength. So this industry we know is already strong, both in itself and relative to others. So why don't I look at the PR stocks, 54 PR stocks? What am I looking for? High dividend yield stocks. Well, sort by dividend yield, look at the stocks that are up by at least 5%, several of them. Let's use multiple programs. I have both TradeStations Q Elite and Metastocks Q Global. Let's put it on Q Elite for a change. I am dropping the ticker symbols in Q Elite to see if they have a proper trade setup. STR would be one, but there may be other trade setups. I'm looking for, there is one headwind that is in STR that we already know. Let me delete that. There is a candidate which is showing a possible breakout as well as flow setup at price extreme low. So it is similar to STR in the sense it is at price extreme low. Oh, sorry. No, it is REPX. REPX also at price extreme low, giving a possible breakout flow setup. Let's look at it. REPX. That's nice. See, instantly one look at it and I may favor it even more. The stock is in a downtrend but now breaking out of a triangle. Interestingly, this bullish headwind caught the very low, almost the very low, I can say, almost the very low, and now weekly has a bullish headwind. We had a few candles prior to the bullish headwind, but all of those had a lower tail. This is the first candle in weekly with a bullish shape candle and a bullish headwind after this long drop. Daily has a bullish headwind, beautiful breakout from triangle with a bullish flow and a flow setup. Remember in the last market recap also I think I mentioned this Q flow setup is different from other trend following setups in the sense that it can sometimes anticipate when the trend is changing, or at least tries to, and signals a flow setup even when the stock is actually in a downtrend. And we have a flow signal, but not only that, we have a possible flow setup using this exception, the special, if I may use the word, special algorithm in the program. And what do I see more? The stock was at jump thrust low, at price extreme low, all of a sudden came big move up 3. More often than not, I am repeating, more often than not, that leads the stock move higher, and we are seeing the first possible buy opportunity here using a breakout setup. So REPX, I would like to now see these stocks on page scorecard. Great. What I looked for, high dividend yield stock, at least 5%, and it is an undervalued stock as well. The company makes money in the same industry. You already know the industry score is very strong. So I found another stock also in the same industry that could be bought with high dividend yield also. You may find this approach very effective. When we find a stock to buy from the list of liquid stocks, because liquidity has a definition for me here. When I ran Finder, 500,000 shares on average per day. We don't need to be so restrictive, and the way to find trades in strong industry strong company is to find a trade first from the liquid stocks. Use Q Vital to find similar peer stocks. So we found one REPX, and I think there was another stock that was signaling a possible buy here. That was this box setup, that is PXD. Let's look at that also. PXD. Switching between Vital and charts. This chart is not so attractive for me. The weekly has a support that is attractive, but daily has immediate trendline resistance. So I am not going to look to buy it. So no point looking at the fundamentals. So what are the two stocks I found then? One is STR, another is REPX. REPX. What are the characteristics of these two stocks? They have many common characteristics. Both have proper buy setup, both are at price extreme low and going up, both are in the same industry that was very weak earlier and now accelerating very fast, one of the strongest industries as well. Both are high dividend yield, and that last part is important based on how I looked at the market, that I would like to be on the safe side. So if I buy stocks and I don't want to apply stops, if you want to apply stops, that is fine also for these stocks depending on your trading strategy. But if you are like me, I would not mind buying these stocks in a longer term holding account also, because I am buying them at a low price at a high dividend yield, and currently the industry is strong, fundamentals are okay also. From dividend yield they are strong actually. So that is how I find trades in this market also. There are in fact few other high dividend yield stocks at low price level that you could look to buy. I found two of them. and I am at 1 hour point. This session is not really to find trades, but explain the use of the queue systems and the techniques using live systems. I think I did a good job of that today. I think so. You can tell me. Well, let me end today's session here. Thanks a lot for attending. I look forward to seeing you in our next session, most likely next weekend. Have a great weekend, and as I always say, as these live examples show, no reason not to do that. Trade profitably. Thank you.